Hey, how's it going? John Dorsey with FindInfoWorld.com. And I just want to share with you some thoughts I've had about money. You know, I've run across a lot of information in the past couple years, and things are starting to really come together as far as what are we out here working our butts off for? Pieces of paper or data entries into our bank accounts. You know, does money really exist? What is money? And if you really think about it, money is anything. Basically, money is a representation of value. So, money can basically be anything. It could be tree branches. It could be beans, cocoa beans. It could be pieces of glass. Really, it could be anything. But that anything must be backed by something to really have value. Like, for example, well, we know for a long time that gold and silver was a currency, and gold and silver has intrinsic or natural value because it's a rare or precious metal, and that metal uh, can also be used for other things. With silver and gold being very conductive or being superconductors, so they have a lot of value beyond them just being a metal. So this is why when they first established the dollar, why it was silver certificates, gold certificates, because it was backed by gold and silver, which has value. So when the United States got removed off the gold standard in the 70s, or early 70s, what was our currency backed by then? Well, basically nothing. Basically, our money was backed by sweat equity, or yours and mine, our own hard work, our grandkids, our grandkids' children, all their hard work is the only thing backing the dollar. The fact that we'll go out here and work 40, 50, 60, 70 hours a week to basically make more money and spend more money and keep this hamster wheel turning. So back to the bigger point here. So when you go get a car loan or any kind of loan, you have to wonder, well, and you notice a lot of the banking is going more towards cashless. You get your direct deposit in the bank. A lot of companies are issuing their employees like debit cards, so they'll get paid directly to their debit card. It's a lot of different ways that these companies or people, the industry or the world is moving more towards a cashless society. So when you go to the bank to get a loan, since there's no real money, where does the bank get the money from when you get a loan? Does the bank, let's say the bank has $1 million on deposit. I mean, of course, it's more than that. But, well, what do we know? We don't know what's in there. But let's say a bank has $1 million on deposit, and you want to get a $10,000 loan for a car. Do you think the bank takes $10,000 from the $1 million asset, or what they have on hand, and then cut you a check so you can go buy the car? Or do they transfer the $10,000 from their account to your account and then you write a check to the dealership? Or do they even wire transfer the $10,000 from their account to the car dealership? No. The way that it works is you go there, and if you look at your contract, it's a security agreement, it's a bond agreement, it's a negotiable instrument. It's like a promissory note, a promise to pay. And what that note is backed by is your signature. So what happens is when you sign it, that document now becomes worth something. And they can take that document and trade it on the stock market. Remember, like the housing, that's what was going on in 2008 with the housing crash, is that these mortgages was being sold, securities was being bought and sold and eventually got to the point where it was bought in these mortgages was what they called them. Well, I can't remember what they called them. Well, anyway, they called them something. But basically, these mortgages was bought and sold so many times that pretty much their value was basically was worthless. And then once the interest rate shot up on these adjustable rate mortgages, the people that were, in those deals that barely could afford them in the first place ended up getting stuck with, they went from a $600 a month mortgage to a $1,000 a month mortgage overnight. And this is why a lot of people defaulted on those mortgages, because they couldn't, could you go from, if your rent or anything was $1,000, $600 a month, and all of a sudden it went to $1,000 the next month, could you swing that? Especially if you was already living on the edge as it was financially. So basically, these banks operate in fraud. They make you believe that they are giving you a loan, or they're giving you some of their money and you got to pay them back. But what's really happening is that you are the creditor. You are giving the bank money because your birth certificate it has been traded since the time you were born. Your birth certificate has been traded, and your birth certificate is worth money. Now, you can't take your birth certificate to the pawn shop and get money. That your birth certificate is like is a security instrument. It's a bond, like a savings bond. And if you look it up on treasurydirect.gov, you type in your birth certificate number, the number on your birth certificate, you can see pretty much what your birth certificate is worth. So back to the point that, so what are we out here working so hard for if basically we were never given anything from these banks? We gave them the money, because that's how these banks get access to our account, is by our signature. It's kind of like, imagine if you had a 18-year-old son, and for the first 18 years you knew that he was getting $1,000 a month put into some trust account, and then now it's so over all those years he was basically getting $12,000 a year for 18 years, and he has all this stacked up into a trust account, but he knows nothing about it. And then on his 18th birthday, he's like, yeah, I want to get a car, but I just can't afford it. And you tell him, hey, I'll loan you 10 grand to get this car. All you gotta do is just sign right here. You writing a check on his account, but he has to sign it. That's exactly how it works at the banks. So that's how these banks get access to your account. They basically have you sign for the money, and then they get it. They get the 10 grand, and then they tell you need to pay us back 10 grand plus interest. So these banks get paid triple. They get the initial 10 grand from your expenses, your exemption account that you have at the Treasury. Then you pay them back the 10 grand principal, and then you pay them back the interest on that 10 grand. So they getting paid back big time. And this is why the banks got bailed out. This is why the banks basically run the world, because of our own ignorance. So if you want to learn more about this stuff, you can visit financialworld.com, or you can just do some more searches on YouTube, Google, just about exemption accounts, mortgage fraud, bank fraud, birth certificate bonds, prison bonds, bail bonds, any kind of bonds, and your mind will be blown. So that's it. That's all I gotta say. If you got some value out of this, like it, share it, subscribe to the Fine Info World channel, and I will talk to you again soon.